Good morning, my free folk followers. It's about it's about 5:30. Got my coffee brewing, sitting there, kind of chilly. Cold front moved through. I'm seeing it's chilly. I'm about 46 degrees, I guess, right now. I know some folks up north are in a wee bit of colder weather, and I'm sorry to hear that. Actually, it's going to be a nasty day, rainy, 56. I'm just going to hide and work today. So, speaking of work, the market's up about 20 points. The futures are up about 20 points in the pre-market. So it's probably a follow through. And we closed at 68, so we're at 88. Yeah, we're challenging the high of yesterday. And if we break that high, we could very well have a gap fill. If it's a half a gap fill and turns around, then I think it's a continuation of the down move. So herein lies the risk. And I had one of these charts set up. I think this one may have it. Okay, so here's the Fibonacci. Going from the gap to the low of yesterday, we actually retraced about 38. We're right now tagging the 61. If we open up right here, we tag that 61.8%. And this is what I'm kind of worried about. We could tag that, turn around, and come down. So we make that retrace, good consolidation. It's like a correction in the move at 61%, turn around and continue our march down. So that's our risk. That's what we have to watch. This 61.8% is about at yesterday's open. If we break that, the halfway mark is the 76.4%. Interesting how these Fibonacci's lay out. All you could really expect is like half a gap fill. So we may tag that 76%. Now, normally when I'm trading a Fibonacci and I use it for my targets, if we hit that 67%, we're probably making a move to the 100% mark. But it's just interesting how that will pose some resistance. It may take most of the morning to get to that 76%, and then we'll head into a consolidation, which is what it seems like the flavor of the market has been the past few days. So that's what I'm watching. So right now, if the futures hold, this is what we're looking at. And I mean, I'd like to see that Christmas rally. I like that seasonality. The history would dictate that it would happen. I mean, it would. Anything could happen. This is the market, but I think you have like 20 years of data demonstrating it, and historically calling it after the 21st. And the reason that happens is, or at least the 21st of this month, I feel it happens. That happens that way is because you have triple witching, and you have reallocation of shares and contracts. And then on Monday, historically, it's always been a very volatile day after the triple witching Friday. And then here's the Tuesday after the Monday, after the Friday of triple witching, and we may be ready to get going. So, keep your eye on that. I mean, ultimately, I like the market, and I like the economy. And look, man, it obviously is not politically correct to say that this strand or this variant is less severe than the others and just amounts to a cold. And you could see it in the language and the attitude on TV. Everybody will say, well, we see this, but no confirming information. I mean, come on. A bunch of liberal pussy son of a guns. I mean, if it walks like a duck and it quacks like a duck, I'm going to assume it's a duck. And the reality is, I see people around me getting this, and they're fine. I mean, South Africa is fine. But I don't know. I have to blame the liberals and Democrats. That's all right. I have my religious issues too. But I mean, it's a manipulation of the public opinion, and it's a manipulation to get people vaccinated. And I'm pro-vaccine, but I'm also pro-choice. I believe you have the right to do with your body what you want to do with your body, and I don't think that anybody has the right to dictate that. I think it's prudent to get vaccinated. I actually went and tried to get a booster. But they wouldn't do it because I'm out of my home state. So that's ridiculous. This is essential that we do it, but a lot of regulation blocking doing it. And for me, I find it prudent because I had a wild youth, and I caused myself a heart attack when I was young, and I have like 4 stents in my heart. So and my wife girlfriend, she's a healthcare well, she's a doctor, just laid out there, and she kind of argued the case that it should be done. So I went and had it done. Anyway, I guess it doesn't have a lot to do with your training. But that's all right. I've been alone for a while, so I'll babble. So anyway, for me, it was prudent. One of my children decided not to do it. It's fine. She's a young adult. It's her decision, and that's cool. My other child decided that she did want to do it. Everybody should make their own choice, just based on risk reward, just like trading. It's all about risk reward. So, anywho, this variant to me is going to be a non-factor unless out of nowhere they find that people who are infected with Omicron, I don't know, their organs a year later melt, or 6 months later there's some repercussions. But right now it looks like you get the virus, you pass the virus, you move on. And it's that simple. So anyway, I think that this is providing a tremendous opportunity. So where it relates to equities, buy what you like, man. Buy what you like. And you know what? Anything that didn't hold up well, and you're starting to see some surface cracks and things like that, it just shows you. Like Buffett once said, when the tide goes out, you get to see who's swimming with no swimsuit on. And that's it. The tide went out. You saw what couldn't hold up. You see what's taking a drastic beating. Don't buy the weak stuff. Buy the strong stuff, because when the tide rises, it's going to lift that the quickest. So look at good companies. You know what? Tesla's going to be around. They make a good product. A lot of people entering their market, and that's very questionable. And we've seen that going forward. But Elon's a savvy guy. He's a savvy guy, and they have other aspects. I mean, their software, their batteries. It's a good company. I like Advanced Micro Devices. I like Bank of America. I don't know. You know what? I look at management. JB Diamond's a smart guy, but you know what, dude? I think there's something lurking in the shadows, and just something about that guy rubs me the wrong way. And I think eventually it's going to come to light, and it's going to hit the company. So, but again, fundamentally, J.P. Morgan Chase is a good company, good investment. But anyway, that's why I steer towards Bank of America. And all right, so maybe J.P. Morgan might outperform it, and I'm wrong. But either way, I'm going to make money. But something's telling me keep away. Costco, love the company, good company. We're doing pretty well on it. It's providing opportunity. Yesterday was a good opportunity. I love Disney. Facebook, I'm not too crazy about it. Honeywell, I think that's a good organization, good company. Do your homework and get involved with that. NVIDIA, I like, and I'm putting that sucker away. And TBT, I've been talking about TBT for quite some time. Viacom, you asked me, Viacom's going to either get involved with some mergers or be taken out. So, and I see $64 a share on that stock. But once the buzzword gets out there, you're going to see it push up, and then it's going to happen around $64 a share. You watch. Verizon, good dividend-paying company, and Exxon Mobil. I'm going to start talking about that again. It's nice and low. That dividend's got to be really, really high if you're into the dividend stocks. That baby's got to be about 7%. So affords you some investment. So anyway, there you go. You got a little babble. You got a little opinion. Hopefully you get a little technical outlook. You know what? Let's do something else too. Let's look at the weekly and see what the weekly looks like at this point. I don't know what my oh, look at that, Matt. That is some quick stuff. All right, so you're still getting that divergence. It's disconcerting. You're getting that divergence, and I think we're going to close up that gap. I mean, we have to break that high and turn that that momentum around. And uh, that's it. So anyway, the short or long is the divergence triggers at 495. So we're less than 100 points away from triggering that divergence. So yeah, you got to keep your eye on that. There are definitely some topping indications right here. This is actually a topping pattern. It just hasn't triggered. It's demonstrating it, and you could make the assumption that it's going to turn around and close and decide to take a bearish position. But in order for me to trade it, it will have to break that because it confirms once it breaks here. And I'd rather take a confirming trade than a hopeful or assumption trade. So that's what institutions are waiting on. The game is not get in at the high and get out at the low. You get in high, you get out low, in between somewhere nicely. You can't pick the top, you can't pick the bottom. So I'm not recommending that you put your put on right now because anything could happen, and this baby could just start its march up, and then this becomes a higher low, right? So you have a low here. You have a higher low here. All we have to do is make a higher high, and we've continued the uptrend. So that's what you don't want to get caught in, making that assumption it going the wrong way, and then you never know. It's off to the races. So anyway, keep a weary eye. If it does trigger, it doesn't mean that it's the end of the world. All it's telling us is that trend has changed and stopped. If it triggers, it could go down a little bit. Excuse me. It's consolidate and then take off and go the other way. So based on the fundamentals, based on the economy, based on this variant, if it does trigger and go down, it's just creating more buying opportunity. So in this buying opportunity, you don't want to throw every last dime at the market. You always keep a little powder dry, as they say, or you keep a little something in the war chest, as I used to say at my firm. All right. Well, anyway, I appreciate your time. As I should have said in the beginning, hit the subscribe, hit the bell, and hit the like. I appreciate that. And I appreciate all the comments, good and bad. Throw them out there. Question my views and question my opinions and challenge me. I appreciate it. You actually make me a better trader when you do that. So actually, since I have you on the line and I'm just so lonely, let's just take a look at the ES, at the futures. And this is real time, what's going on right now. Here's the daily. The daily also is showing a divergence. We have an inside bar right now, which we're up 18. Looks like the energy is kind of fading out a little bit. But we'll see if we can get something behind it today. Maybe get some buying in there. See if this baby could grow some legs and stop running. So it's an inside bar. It's really not telling us anything. If it remains that way, then there's a possible trade on an inside bar tomorrow. But that's it. That's all it's really telling us. Let's have a peek at the weekly on. And the pattern's a little bit different just because the market's longer. And sometimes it gives you some good insight. So here's the weekly. If we close the week like this, I mean, that's a hammer. That's a good indication that we do a little push up. Hammer. But you can see that divergence here. It's very obvious. Divergence. It's just tagging that 20 period. And I call it 20 period because, I mean, normally people say 20 day, but I'm looking at the weekly chart and it goes by the period. So it's a 20 period line, that gray line. And it's kind of caught between the 8 and the 13. Once it gets above that 8, we know we're going to push up to that 705. We'll challenge that again. But again, you know, we got to turn this baby. I mean, it's going to take some energy to get that baby to turn. And then that's just a higher low, and away we go. So, all right, everybody. So we're neutral on the market until we get an indication of whether it's going one way or another right now. I'm neutral with a bullish bias because of seasonality, and I like what's going on in the economy. You know, if you listen to the news, it's sensationalism, and yesterday up until about 1:30, it was all bears, and yeah, you know, that's all they interview, bears, and yeah, you know, one dude was talking about 20% correction, and then around 1:30, it got really positive on CNBC and MSNBC. Reuters is a good news source. It doesn't really participate in the sensationalism. So we'll see. We'll see. Anyway, thanks for hanging out. Thanks for checking me out, everybody. Be calm and cool. Get in that meditation. Be at peace when you're trading. And good luck trading.